Let's just start with a broad one if we can. Given what we know right now, in this very moment, how satisfied are you that the Federal Reserve has done and is doing enough?
Well, I think we've done an incredible amount in the past few months. First, starting in early March, we cut the target federal funds rate by 150 basis points to close to zero. We put out forward guidance saying that, indicating that we expect to keep interest rates low for quite some time. And of course, we've done enormous actions in terms of providing liquidity and supporting market functioning in Treasury, mortgage-backed security, corporate bond markets. We've got most of our facilities now are open for business, and we're seeing some really big impacts from that. Market functioning has improved pretty significantly. Liquidity is flowing much better, and I feel like we've gotten ourselves in a good position now. We still have work ahead of us, especially around providing for our Main Street program that we're looking to open pretty soon.
John, New York is starting to open up. New York City, the only part of the state that is not open now. As it does, what are you seeing, what are you expecting in terms of the ability of the economy to come back, how quickly, and the same as the rest of the country opens up? What do you think you're going to see now?
Well, I think we're starting to see some initial signs of what that looks like, and looking at all this high frequency, very granular data that all of us have become experts at. We're seeing people willing to travel a little bit more. We're seeing retail sales pick up some, especially in areas where the restrictions have been lifted. So I think we're starting to see some signs of increased economic activity and returning to people spending money and being willing to travel and stay at hotels and things like that. I think one of the big challenges for the New York area is that tourism is such a huge part of our economy. Whether you think about traveling to visit not only New York City, but New York State and the region, and obviously entertainment and all the cultural attributes that the city offers. So I think that that's going to be an area that the recovery may take longer. I see construction and manufacturing as areas where we may see a return to better economic conditions sooner. But we'll be watching this data very closely and carefully.
John, as you go from shutdown to reopening, can you talk to us about how policy needs to evolve in line with that and how objectives at the Federal Reserve might shift?
Sure. And, over the past couple of months, as I, mentioned, we've really been focused on making sure that credit is available to households and businesses. And that's what our facilities have been really about, making sure that markets are functioning, there's liquidity out there, and that we're seeing credit continue to flow to small, medium, and larger businesses and households and state and local governments. So that's really where our focus has been, and that's where we'll continue to be, because I think that's the real issue for us, during the pandemic phase and as we recover. Obviously, we're also very focused on, monetary policy. How can we best, provide guidance about our future intentions around policy? How can we best shape the use of our tools to support a very strong economic recovery and getting back to where we were early in the year, because that's really where I see our objective. Get the economy back to the kind of conditions where we had close to maximum employment and price stability, which was just a few months ago. So that's really where I think our focus will be.